Hello, everyone. Welcome to Wealth Matters for Physicians by Altfest Personal Wealth Management. In today's video, I'm going to ask Andrew Altfest, the president of Altfest Personal Wealth Management and a key member of Altfest's Investment Leadership Committee, 3 questions about what to do regarding a portfolio as one gets closer to retirement, the U.S. Federal Reserve's ability to execute a soft landing on the U.S. economy, and Altfest's thoughts regarding cryptocurrency in a portfolio. To let you know, Altfest has been helping physicians for nearly 40 years achieve financial independence by optimizing all areas of their investments and personal financial lives. We do this in a fully objective, no commissions manner, and as legal fiduciaries, we're always required to put the physician's best interests first. Our first question is, I'm a physician a few years from retirement. I have a lot of index funds and some technology stocks. Are there things that I should be doing now to be in good shape for retirement?
Yeah, well, first think about the investments that you have, because if you have technology stocks and index funds, guess what the biggest component in the index funds are? Technology stocks. That's the nature of index funds. The more something does well, as technology stocks have done well over the last number of years, except for this year, then they become a bigger component of the index. And so if you have technology stocks that you own directly, and then you have technology, then you also have those technology stocks in the index, well, you might have a lot more in technology than you first think. So first, think about the concentration risk there. Second, think about what you want to be owning in today's environment. When interest rates were low, when there was a lot of government stimulus, then it was a great time to own the market. Today, we think you have to have a very different portfolio. You can't own everything. And what has worked well is not necessarily what will work well, because today's challenges are unique. And so we think that you should be thinking about alternative investments, select alternative investments, thinking about putting money outside the United States in select markets like developing markets. On the bond side of the equation, we're also emphasizing inflation index bonds, bonds that actually go up in value as inflation is higher. We are emphasizing housing-related bonds, and we're starting to buy long-term treasury bonds as a way to manage risk of a recession as well. And so we think things that you need to be thinking about your portfolio differently today, and not be making micro changes, making major changes.
Our second question is, what do you think is the likelihood that the Federal Reserve will be able to execute a soft landing for the economy? Or asking it another way, what do you think is the likelihood of a recession in the United States as the Federal Reserve works to bring down inflation?
Well, you have the Fed chair saying that monetary policy is a blunt object, and it's very difficult to be able to raise interest rates without causing a recession. So if the Fed chair doesn't thinks it's a challenge, then who are we to think otherwise? I think that a lot is going to depend on how fast inflation will be tamed, just by the nature of some supply increasing, by the nature of there being a pullback in economic activity, without interest rates having to go up even further, which is going to in effect crush the economy and cause us to go into a recession.
Our last question is, what are your thoughts about having some cryptocurrency in one's portfolio?
Yeah, I think you can. There's nothing that is that if you do it in small amounts, you take it in small doses, as long as it probably won't kill you. However, I think there are better ways, better investments that have less speculation. I think cryptocurrency was used in part as a proxy to manage inflation risk. normally people would own gold to do that, and instead they own cryptocurrencies. When interest rates moved up, a lot of the money left crypto, and so I think if you're looking at crypto as an alternative, and like you'd be looking at gold, you could be buying gold at more reasonable prices than crypto, but we don't even want to own gold today. I think you could hedge the risks that are in today's environment with other assets that will do a better job at hedging that risk. And so we like inflation index bonds. We're starting to buy longer term inflation index bonds as well, because they can perform well both in a higher inflationary environment and an environment in which the economy is pulling back, and which we believe will cause longer term bonds to increase in value. So if you want to have fun, you can buy crypto. I think that if you want more serious investments, there are plenty of others out there.
Thank you, Andrew, for answering today's questions. If you have a question you'd like us to potentially answer in a future video, please enter it in the comments section below. If you like today's video and want to receive notifications every time we release new ones, please remember to subscribe to our channel and to click the bell icon. If you are a physician who would like to speak to us about your own personal financial situation, please contact my colleague Jesse Freeling at 212-796-8732, or by emailing Jesse at his email address, which is in the description of today's video below. Well, that's all for today, physicians. I look forward to being with you again in our next video. And until then, be well, and remember to keep on optimizing your finances, or ask us for help if you'd like.